It's October 30th, 2025. Dwyer, always 1776.com, a free site. Also, money1776.com, a free site. Nothing I say in this video should be construed to be investment advice. I want everyone doing their own due diligence. If I mention a stock or an ETF, right, your operating assumption should be that I either own the stock or am interested in owning the stock or ETF. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, folks, we're living in weird times, right? The United States government has shut down portions of it, including the SNAP program, which provides food to the needy, those in need of government assistance, right? I need for folks to think about this truth. Just like you have, housing bubbles, stock market bubbles, you also have government bubbles. And many of them don't clear, right? Our government right now is being so poorly run that some of the most important programs, right, SNAP, Social Security, are going bankrupt, right? They're fragile. We haven't even prioritized them enough to provide for their long-term sustainability. And this is at a time when our debt is around $38 trillion. Now let's contrast that with private markets. Folks, private markets are harsh. They're unforgiving, right? My advice to voters who are concerned about SNAP isn't to go beg their local congressman or senator, right? Because the government system is too broken. I believe it needs to be disintermediated on these programs. My recommendation is that you go to your local food bank and you ask how you can make a donation. That's a better use of your time than talking to the powers that be. We know who's to blame for the $38 trillion debt. It's Democrats and Republicans, because we've been running a duopoly for years, right? They're the ones voting. Everyone says, oh, the other party is responsible and stuff like that. Folks, if this is the best they can do, then we need to come up with alternatives. I believe the private sector is a better alternative than what our centralized federal government's doing to people of color, to women, to minorities in gender. Let me just say, I want people to remember crypto when it first broke, right? Today, we don't know who Satoshi Nakamoto is. You saw people of different genders, right? Caitlin Long, different races, right? Arthur Hayes, Samson Moe. They were on the forefront of the crypto revolution, right? You saw people who weren't clean shaven, they had beards, they weren't wearing collared shirts, many of them were wearing t-shirts, and crypto was eating traditional finance's lunch, right? With a group that looked like regular Americans. They were eating traditional finance's lunch to the point where, after, of course, hearing nonsense that, crypto was a Ponzi, Bitcoin wasn't sustainable, from people like Jamie Dimon, Eventually, BlackRock and Wall Street had to come around. This is after, of course, Fidelity started providing crypto services to their customers. That's the way markets work. You had a great scene in crypto where Ethereum got hacked. It's akin to somebody robbing a bank and the community, the depositors in the bank, the people running the bank saying, no, 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 we're not going to undo transactions. The crooks, they've run off with the money. But more important than them stealing the money is the idea that we need to support the finality of our transactions. So even though we just got robbed, we're not going to fork the chain, because doing so would undermine the finality of our transactions and people's faith in our system. Now, that was crypto before, of course, this Genius Act. As an Ethereum investor, I'm grateful for it because, at the end of the day, it's more beer for me, quite frankly. But stable coins are really a prop up to fiat currency, right? Just understand that, Martin Armstrong, esteemed economist, believes stable coins are, in effect, war bonds, right? You're propping up a dying system because Tether, for collateral, has to buy U.S. bonds, right? So, of course, the stablecoin concept is spreading throughout the globe. Governments now realize that they can use crypto to toke up their bond market, right? To firm up their bond market. I just want people to remember crypto when it was just a free market, where yes, you had hacks, you had exchanges being hacked and things like that, but you had an idea, and folks, it was ruling the day, right? I have no reason to believe in, status quos where the people involved don't look like normal Americans, where everyone's wearing a washed and starched white shirt with a tie. I have no reason to believe that they have any idea how to manage markets better than people wearing tie-dyed shirts with beards and uncombed hair, right? Follow the markets, not the cultures. So, let me just say, private markets, unforgiving. Meta, as I make this video, down 11% on the day, right? 11%. Folks, you never know how these earnings reports are going to go. 24 hours ago, I wasn't planning on trying to free up money to buy Meta. I'm going to have to try to do so within the next few days. This is a compelling opportunity. Let me just say, again, government markets don't clear, right? The status quo expects you to waste your time listening to senators explain why, they can't agree with the other party and stuff like that. In the real world, the private sector, right? Meta announced a tax charge of $15.9 billion that was required because of the recent Big Beautiful Bill in Washington, which changed the manner of recognition of a valuation allowance transaction for U.S. federal deferred tax assets, right? So just understand, recent developments in Washington caused Meta to take a tax charge of $15.9 billion. So they missed on earnings per share right, which would have, without this $15.9 billion tax charge, beat consensus numbers by more than 8%. And because this is the headline news, this is the culture we live in, this is the headline news, right? Miss on EPS, tax charge of $15.9 billion. The market has punished Meta, right? You don't have, disproportionately male U.S. senators giving interviews to outfits like CNBC explaining why they can't, reach an agreement that will allow SNAP beneficiaries to actually receive food money, right? There's no, group that you're supposed to believe has any special insight here. Here the investors just acted. It's their money. Meta's down 11%. Here's what I need for people to consider. Year over year, Meta's revenue growth is up 26%. I hope, as you came across a story where the title says $15.9 billion tax charge, missed EPS, I hope you actually realize that the market will pay you to read the rest of the story. If the rest of the story has information that shows that the very short-term price downturn is temporary. So, Mag 7, who at this point has the cheapest forward price earnings ratio? Folks, it's Meta. The price earnings ratio is at 23 when judged against 2026 PE. Right? Just understand the revenue beat was more than 3%. Meta Super Intelligence Labs off to a great start. Right, folks? I'm looking through these numbers. They're spectacular numbers. In other words, you had a company release earnings reports, admit that because of the big beautiful bill, right? Keep in mind, Trump, second term, hasn't even been in a year. Because of this recent bill and because of its change in the treatment of deferred tax assets, Meta would have to take a $15.9 billion hit. Then Meta explained that they're knocking the cover off the ball. 26% year over year revenue growth? Right? Cutting edge parts of their business, right? The superintelligence labs, knocking the cover off the ball. The EPS miss that would have been a beat by more than 8%. Folks, this caught me unprepared. I wasn't expecting Meta to be down 11%. Right? I'm scrambling here. I won't be able to get into Meta until early next week. By then, I'm expecting this 11% sale on Meta to adjust. I'm expecting other investors to look at the numbers and say, wow, Meta did great, except for the $15.9 billion one-time tax hit. Right? Understand the way the big beautiful bill worked. You had changes in American policy that would lead to tax hits now that would be accretive in the future. So if you're a long-term investor, not a swing trader, not a day trader, if you're actually an investor more than you are a trader, right, folks, here you have a Mag 7 stock heavily involved in AI investment and development. A well-funded stock. that has immediate access to large language models, right? Because Facebook is free and everyone uses Facebook. And you're turning over your content to Facebook voluntarily, right? This is a company that doesn't have to pay for LLM, large language model access. You mean to tell me that you're getting them for 11% cheaper than you could have gotten this stock for yesterday? And that's after a 26% year over year revenue growth? I don't get it. I wish the government operated like this. I wish we were able to, have assets readjust and have markets clear quickly. Meta right now is a big bargain. A big bargain. And understand, I'm a guy who, invests in Meta's competition, Google. Right? The $15.9 billion one-time tax charge has tilted the market in a way that's unjustified in the short term. These are the kind of bargains where, this is the opposite of passive investing. This is where you're sitting in the room, you're just Joe Clueless hanging out. Then you hear news and everyone's panicking, right? It's like you're on the deck of the Titanic and you're sitting there and you're like, wow, I must have missed something. Did I not hear a 26% year over year revenue growth? You're like, whoa, did I not hear a revenue beat of more than 3%, which is huge in a quarterly earnings release? Right? Weren't people criticizing Meta for investing in Meta Superintelligence Labs? Then I'm hearing that's a winner. Then I'm looking at Meta's business, the name recognition, the value of the markets they're in, AI, right? As I keep mentioning, this background's an AI background. You don't think I actually drew this, do you? Right? So take a good look at Meta. Folks, I understand no one wants to catch a falling knife, but sometimes that knife is falling for reasons that, quite frankly, aren't warranted. Right? This is the situation. Jim Rogers, great investor. Someone asked him once about investing, and he said, it's like sitting in a room, and then suddenly you look over and you see money on the side of the room in the corner, and you get up, walk over there, and pick it up. Right? I believe that's Meta today. I'm going to try to get into Meta. I didn't plan it right. Right? Amazon's earnings release is ahead of us. I wasn't expecting Meta to get punished by double digits percentage-wise today. I probably won't be able to buy Meta until Monday. I should have been smarter. You live, you learn. Right? Let's just say, but I'll be picking up Meta within the next few days. Of that, I have no doubt. Let me hear from you. I hope you leave your comments in the comment section of this YouTube video. Let me say too, I'm actually, while I think we're in a blow-off top, because of the overvalued Buffett indicator and Schiller PE index, I'm actually bearish on the market in general, but I need for people to understand that it's a market of stocks, not a stock market. Right? You can be in a bear market and still have some companies that are gems that the public doesn't fully appreciate. Folks, Meta is that company right now. Right? Meta at a 23 forward PE. Oh my goodness. Is it December 25th? Those are my thoughts. I look forward to yours in the comment section of this YouTube video. Thanks for stopping by.